name is Karen Saintville. I am here with Azhar, who is managing partner at Queens Court Capital. Good morning.
Good morning.
And we're here at the 2026 Distressed Investing Summit, hosted by the M&A Advisor. And we have a couple of questions for you today. First one is, can you tell us a little about what you've been focusing on lately at Queens Court Capital?
Yeah, Queens Court Capital, we focus on special situations and deep value opportunities, oftentimes situations where there's a lot of complexity at the lower end of the middle market. We think there's tremendous opportunity given where we are in the cycle and with the uncertainties in the macro and the world.
Amazing. And looking into the future, are there any particular sectors or geographies you're excited about that seem poised for action?
Well, we're focused on the US and we focus on complex transactions. So oftentimes these are transactions where there's some element of an in-court restructuring, out-of-court restructuring, a carve-out, or it's a problem child for a private equity fund or a private credit fund. And we are providing a solution. So we oftentimes can buy a company that a private credit fund has taken over, but they don't want to do a workout. And we're seeing an uptick of activity in that space. We do believe that this is the beginning of the end of the capital cycle, and there's going to be tremendous opportunities for special situation investors, particularly focused on the lower end of the middle market. So we think that there's going to be some interesting opportunities given that the growth of the private credit market was tremendous for the last 10, 15 years. We think that the shadow default rate in private credit is going to reach 10 to 15%. And we believe that there's probably, right now, a significant portion of borrowers that are using PIK, payment in kind, as opposed to cash pay, and so we think that's a symptom of what we think is over leverage and operational challenges that are being faced.
Thank you for that. And last question, one area of focus at the summit today is the outlook for 2026. Do you see any particular challenges or opportunities on the horizon?
Well, I think 2026 should be, barring some of the geopolitical issues, I do think the 2026 is going to continue to be volatile. However, I don't see the tremendous default rate going up this year. I do think that default rates potentially could rise significantly in 2027, 2028. There's $600 billion of private credit maturities coming due between 2026 and 2030. And so these are loans to borrowers that are going to be coming due. And I think there's going to be tremendous opportunity to basically be able to restructure those assets, buy these assets at attractive valuations, and some of which are going to be problem children or orphaned assets or opportunities. So I do think 2026 will be, barring the geopolitical challenges, I think it should be an okay year. However, I do think in 2027 and beyond, there's going to be a tremendous pickup in activity in distressed and special situations investing.
Okay, well, that is it for today. Thank you for your time, and we hope you enjoy the rest of the event.
Thank you.
All right.
Thank you for tuning into M&A TV. If this episode enhanced your strategic outlook, please like, subscribe, and share it with your network. For more critical insights and high-level interviews, follow us on all our socials and visit our hub at www.maadvisor.com. I'm Roger Argonaldo, and we'll see you next time right here on M&A TV, the definitive voice of dealmakers.